I do want to start talking about this pullback in lending. During the press conference, Jay Powell was asked about the effects on underserved communities, underrepresented communities on this rate hiking cycle. The idea that there is economic pain out there that may not translate to the Fed's mandate, but that people on the ground are still feeling. And I'm wondering, when do we find a balance between those two?
Well, you know, when mainstream America has a headache, black and brown folks have pneumonia. We're all sick, but it does tend to amplify deeper in the neighborhoods that I care a lot about and represent. I will say I'm actually supportive of the Fed's approach. I think that they're trying to reel in more than a decade of basically free money. And that's inflated equities, it's inflated asset prices, it's inflated people's perception of their own success. And I think that the price stabilization is a placeholder for concerns around the structural integrity of the entire market. And everybody's kicked this can down the road for different Fed chairmen have tried to do this and do that, and markets already said no. I think they've used the pandemic recovery as a nice halo effect of saying the stimulus money came in, we got to offset that, which is true. Yeah. But I really think this is the Fed trying to reset everything so that you don't have a runaway economy and you have things that actually, a U.S. that still is the leader economically in the free world and also healthy. That said, in the short term, look, my family's used to high prices. We're not shocked when the price in the inner city is higher. We can handle that in the short term. Okay. We're more concerned about access to capital.
What's the status of that right now? Because when you see the three big regional bank failures, but the idea that a lot of the community banks that were really integral to a lot of those communities are basically saying they're being a lot more cautious right now with extending that capital.
No, you hit it dead on right. Yeah. Look, let's be very personal. I was the chairman of the Community Advisory Board for First Republic Bank during the pandemic. I was still on their advisory board when they were taken over. I know the bank. I saw what they did. They're called a rich bank. That's not the bank I knew. I saw them taking resources from their success and investing it into low to moderate income communities very intelligently and doing things others wouldn't do. My concern is that the banks like that, where I had access to the CEO. Right. And there are others. I don't want to start naming them because I don't want them part of a contagion effect. Sure. But you have regionals and super regionals that are very close to the ground. Yeah. And their bread and butter is connecting to those communities. Yeah. They do things differently than a money center bank. Yeah. Not better or worse, differently. In this particular case, access to capital is better when you have community banks in the game.
Why don't you think that message, what you just said, is a little bit more important or maybe a little bit more central to some of the decisions that regulators are making? Because when I see them take over First Republic, Signature Bank, when I see a lot of those deposits going into a JP Morgan and other big money center banks, that doesn't sound to me like balance in the system.
I think that I am a trending indicator, not a leading one. What I've been saying is now catching up. I mean, I'm here, I'm talking to you. Increasingly, I'm at the center of conversations. By the way, the Treasury is talking to me. I was on the phone with the Deputy Secretary of the Treasury 3 days ago, the OCC. But by the time I talk to them,
what do they want to know, though?
I'm helping them to contextualize and to provide warmth around some of their policies, to understand some of these issues. Okay. And they're thanking me for the input. Unfortunately, in Washington, the urgent crowds out the important. Right. So what I'm talking about is important. What they're dealing with at that moment is urgent. There's been a policy in place or a trend that's maybe a decade long. They're now getting the back end of it. Here comes John Bryant saying, yeah, but you haven't considered the community. And they're saying, yeah, but this fire is raging right here. Let me put that out and I'll come back to you. Maybe rainbows after storms. Maybe this is a moment in time where we can correct this for the future. We can't do anything about the past. I wasn't in those rooms then. Okay, we weren't having these conversations.
You're in the room now, and I know that they're going to focus on the urgent. That's what they have to do. Are they receptive, though, to some of those longer-term issues that you're addressing and the economic issues?
Yes. The great thing about math is it doesn't have an opinion. The reality is that there's not enough college-educated white men to drive the economy for the next 30 or 40 years. That's not a racial comment, it's demographics. So you need blacks to start businesses. You need Latinos and women to be part of the economy. We're all in this thing together. Otherwise, China's a real threat because they want to lead the world and they want to take it from us, and they can't do that unless it's an unfair fight. So if we are better together economically, then GDP will rise. That's my message. It's an economic message of an emerging market that we're going to prepare 100 million people at the bottom of the pyramid, get them into the game, get the credit score up, their debt down, their savings up, so banks can say yes.
I do want to stay on the topic of regional banks here, John, and we are getting some breaking news crossing the terminal about PacWest, which is said to be weighing strategic options, including a sale. And John, I think this is just a reminder that whatever chapter was closed with JP Morgan's effectively takeover of First Republic, there's still a lot of other chapters in this crisis to go.
This story is far from over. We are sitting in a moment in history. I call this the third reconstruction. The movement has to go from protesting in the streets to cutting business deals in the suites. And we're not going to grow this economy just by lending to rich people. All legitimate wealth came from poor people. Remember that Walmart was Sam Walton, right? And we can talk about a lot of black-owned businesses that are driving the economic growth, but it started modestly. A lot of Jewish businesses started, they're not called Jewish businesses, but it was a Jewish immigrant.
Yeah, I got you.
Okay, so all these immigrant stories are part of the American fabric to make us stronger. And what we have to do now is remember that all this prosperity comes from nurturing those at the bottom of the pyramid, and they need access to capital from banks that get their message.
I hear what you're saying. You're also old enough to know how much we've contracted in our banking sector.
Yes.
I mean, I grew up in Chicago. Community banks, and particularly black-owned, minority-owned community banks, were prolific when I was a kid.
Yes.
I walk through that same neighborhood now. None of them are there.
Yes.
None of them.
Yes. We are also, though, seeing how, for lack of a better word, profitable, I hate to be blunt about this, these communities can be. So my message is not a giveaway program. I'm saying we created 230,000 black businesses at Operation Hope in 2 years, our 1 Million Black Business Initiative. We just got the Fast Company Award for an outsized, world-changing idea yesterday. This wasn't a giveaway program. These are 230 black businesses on Shopify. So Shopify is saying, yeah, we want to do good. Yeah. We also want a larger share of emerging black businesses. What's the number one group of businesses starting after the pandemic? Black businesses. Number one group amongst all group, black women. So if banks and corporations, even in a contracting environment, are looking for profitability, I got it for you.
You've been, look, I mean, you've got a ton of accolades from all the work you've been doing with social investing and social impact here. We're at a stage now where some people are saying, maybe the role of banks, at least in the traditional sense that we thought of them, maybe that role does need to be shouldered by private investment funds, by social impact funds, by the so-called sort of direct lending, shadow lending, if you will. What do you make of this idea that the center of power has shifted away from the traditional thrift, regulatory banking sector to this other relatively non-regulated sector?
I disagree with that. I think there's competition, and there should be. But only banks are FDIC insured. Nobody concerned about you put your money in which bank you put your money in because you know that it's FDIC insured. Yeah. You take FDIC insurance off of one of these shingles, one of these banks, and watch how fast the money flies out the door. Yeah. So these non-bank entities, they have a place, and we need them in the marketplace. But banks, because they're FDIC insured, also have a Community Reinvestment Act responsibility. It's $500 billion a year that goes into communities because of CRA, Community Reinvestment Act. That's affordable housing. Right. That's small businesses that I create. I mean, Operation Hope has funded $4 billion in the last 20 years through Community Reinvestment Act. These alternative financiers are not doing that. I commend Michael Milken for financing Reginald Lewis 35 years ago, but there's only one Reginald Lewis. We need millions of Reginald Lewises. Right. We need women and men from underserved neighborhoods to rise up and take their place at the Milken Conference in 5 years, or on NASDAQ as a new listed company, or et cetera, et cetera. I think what I'm just saying is it's all of us. Yeah.